The mixed signals from the Fed are sending gold on a bit of a whirlwind, but the latest FOMC minutes are now seen as hawkish, and gold is paying the price. The metal was down close to $9 this Friday. Joining us now to talk levels is Bill Baruch of II Trader. Bill, good to have you back on the show.
Thanks for having me on today.
So, Bill, let's look at gold here. It's down, then it's up, now it's back down again. How do you see the metal closing off the week here and heading into next week?
You know, it's in a consolidation pattern. I mean, I think the most obvious thing right now is how gold has struggled to get out above first major resistance around 1362 to 1367, 68. There's a trend line from the spike high, the swing high this year that comes in right around 68. That level is something this has to get out above, but it's not in the clear after that. There's still some tremendous resistance, 1377, 1384. If gold can get out above there, we expect gold to do that, and we're advising our clients that we expect that to happen. Then it could be a clear path up through the mid 1400s. But right now, that's the tremendous headwind. And then below here, gold 1335 has been tremendous support. And if that goes, then we're still there's 1300, 1310, 1315 area. So we're in this consolidation pattern in between that and a wait and see mode.
Well, Bill, do you think that next week's Jackson Hole meeting could bring more investors into gold here, shifting back the focus here?
You know, I'd like to think that the Fed takes a middle ground overall. And right now, we've seen a lot of the Fed members kind of edge into the hawkish tone, saying that there is a likeliness to see a Fed hike this year. The markets don't seem too concerned about it, and really they're doubting the credibility of the Fed saying this. You know, if the markets start to believe that the Fed can hike this year, then I think next week you'll see a little more of a slightly dovish tone from Janet Yellen to hold that middle ground. Her speech, when she talks, is everybody's going to listen. That's what's going to be important. So we're kind of waiting on that, and this wait and see mode could wait until she talks.
Now, Bill, another major pressure factor for gold this week is the dollar, which you say has reached a critical long-term trend line. So let's take a look at the dollar now, Bill.
Yeah, the dollar right now, right here, yeah, it's hitting. It's had a rough week, and though the Fed came out a little hawkish on their minutes and some of the hawkish tone, again, the market's doubting the credibility. The market does not believe the Fed will hike. Yeah, we've seen Fed fund futures price in a little better than 50% chance hike now through the end of the year by December. What's important really is to step out of the forest and you see the trees. The dollar has rallied 35% from the 2008 lows. And right now, the dollar's topped out and struggling to hold 100. We believe that the dollar does not go higher when the Fed enters a hiking cycle. It actually is the anticipation of a hike. And right now, there is no anticipation of a hike in the currency market. It doesn't believe the Fed's going to do it. If the 94 level goes, that trend line breaks, then that could really be a catalyst for gold to get out above 1400. We've been very bullish gold all year long, and our thesis is that the rates won't trend higher. They're going to trend lower. Treasury yields will trend lower for longer. And then as well, there's a safe haven bid around the world in a lack of trust in central banks. But this dollar could be a real wild card in that if it breaks this level and starts getting down through 94 and get close to 90, that's going to push gold higher.
Bill, as always, good thoughts from you. Thanks so much for joining us.